Everyone, I'm the tax pro, and today I'm going to give you an introduction to the chart of accounts in Quickbooks Online. Now, this is going to be one of the first of a couple of videos on the chart of accounts, just because if I wanted to do this all in one video, it's going to get a little too long. So this is the dashboard for ABC Creative, which is a fake company that I do these videos in. And what you'll see here is we can head to the chart of accounts a couple different ways. So we can go to the transactions over here in the left-hand column, and we can click chart of accounts. We can also go to this gear icon in the upper right-hand corner and hit chart of accounts. At that point, this is going to take us to this list of chart of accounts. Chart of accounts is very important. It essentially provides the framework from which all of our reports in our company are structured. It essentially tells QuickBooks what checking accounts we should have, credit cards, what assets we have. It is extremely important in proper accounting. So I'm going to give you a breakdown of the chart of accounts. And then in future videos, I'm going to go over things like the asset section of the chart of accounts, liabilities, etc. So this is the basic chart of accounts. We can see what accounts are in here by clicking Run Report. When you start a QuickBooks file, QuickBooks is going to automatically put certain accounts in the chart of accounts. It is going to give you some chart of accounts, okay? And this account report is going to show us all of the accounts that we have here. It's going to give us a couple pieces of information. It's going to give us the full name of the account. It's going to tell us the type and then the detail type. The detail type is kind of like a subtype of our type. It's then going to give us a description of what the account is, and it's going to show us the total balance. So this is a great report to print out and then make sure that you need all of these accounts when you're designing your chart of account structure. So a lot of times if I have a customer who comes, brand new, and they have just a really complicated set of chart of accounts, like we've got all this stuff everywhere, we don't know how to read our reports, we don't know what's helpful. One of the first things I will do is I will pull this report, I will print it out, and I will start crossing off accounts that are not necessary. QuickBooks does limit you on the number of chart of accounts that you can have. So QuickBooks charges you for additional chart of accounts. So you are limited in the number of accounts that you can have on here. And now when we go into this area, we can edit them, we can view registers, we can create new chart of accounts, we can do all sorts of things. What you're going to find that it's not necessarily going to tell you, but there's going to be 5 main types of accounts in your chart of accounts. There's going to be assets, liabilities, equity, income or revenue, and expense accounts. Asset accounts are items of current or future value. Examples of these would be like a cash on hand account or a bank account, your checking account, accounts receivable. So these are amounts that you have charged to customers that they owe you that they have not paid yet. Inventory is an asset. You may have, QuickBooks does these uncategorized items. So you're going to see you'll have uncategorized asset, uncategorized income, and uncategorized expense. But what that is kind of a catch-all place that you can put items that, like, I know this belongs to an asset, I'm just not sure which one. And so you can put it in there temporarily to reconcile your accounts and start closing your books. It's pretty handy, but nothing should ever live here permanently. Undeposited funds, these are amounts that you have that need to be deposited into the bank. Maybe you have some checks, maybe you have some cash. That's going to live in undeposited funds until you deposit it. Those are all asset accounts. Those are very important accounts for your books. Assets live on the balance sheet. Other accounts that live on the balance sheet include liabilities and equity. Liabilities are amounts that the business owes to other people or companies. So liabilities occur, maybe you take out a loan. Maybe you have a credit card. It may be amounts that you owe vendors for products or services that you have purchased from them. Those are all liability accounts. Right here, you'll see accounts payable. These are amounts that the business owes to other people or other companies. This is a liability. Credit card is a liability. Long-term liabilities means that you expect to pay off that liability in a year or more. Okay, so more than a year from now. So that is going to be a long-term account on your books. Those are liabilities. Now, equity is also a balance sheet account. This is kind of a weird set of accounts. Equity is kind of an estimate of if you were to liquidate your company and you were to sell all of your assets for the amount that's on the books, and then you were to pay all of your liabilities, how much would you have left? That is an equity account. Equity accounts, while they're estimates of what would happen if you liquidated, there are actual amounts in those accounts, and those amounts are calculated with real numbers. Okay. Equity is structured based on the way your business is structured and how you're taxed. So I'll go over that in a separate video when we discuss equity accounts. The other types of accounts that you have on your chart of accounts are going to be revenue or income accounts and expense accounts. Revenue or income accounts is pretty self-explanatory. So these are going to be things like you sold products, now you have sales. You sold a service, that's an income. These are amounts that you are getting paid to do your business activities. You may also have other types of income, like perhaps you collect interest on a savings account, or you've invested in something and you get some sort of like dividend. That's not a normal income that you receive during the normal course of business, but it is technically an income account. Expenses are costs incurred to make the revenue. Okay. We have a couple different types of expenses. So you'll have cost of goods sold, which is these direct expenses. So it's directly related to your business activity and the earning of the revenue. Things like you have a cost of renting equipment that you're using to provide a service, or cost of product that you're then selling, or you're taking and putting into with other products and you're making something. Those are direct costs or cost of goods sold. Expenses, on the other hand, are going to be more indirect. So things like I rent a building, or I have some legal and professional fees. I have utilities, that kind of stuff. Those are expenses. And then you also have other expenses that are not related at all to your business activity, things like interest expense. That's another type of expense. So those are the different types of accounts that you're going to have in the chart of accounts. That's an overview. I'm going to make a separate video for each of these types of accounts so that you can get a feel for what you should have in each of these. These categories and setting up your chart of accounts is really important. If you don't set up your chart of accounts properly, your books aren't going to make sense. So I will go over each of those individual types in future videos. And I hope that this was helpful. If you have any questions, please let me know. Please feel free to like and subscribe. I would greatly appreciate it. And I will see you guys in the next video.